Welcome back to the academy. We're starting or continuing from where we stopped in our last lecture, and we stopped at the adjusted cash book, format of adjusted cash book, and we're to continue with the bank reconciliation statement. The relationship between the cash book balance and the bank account balance is a positive relationship. So we are going to look at it in that angle as we proceed. So this bank reconciliation statement can either be starting with balance as per adjusted cash book, or you can start with starting with balance as per the bank statement. So if you are starting with balance per adjusted cash book, please listen attentively. If you are starting with balance as per adjusted cash book, so all the reconciliation, the adjustment would be on the balance of the adjusted cash book. So what I'm saying is, let's say this is the heading, bank reconciliation statement as at July. July is our month, since from the cash book we prepared 20xx, then you rule it. So this is bank reconciliation statement as at July 20xx. So if we are starting with the balance as per adjusted cash book, we say balance as per adjusted cash book. This is very simple. Please, you will get it all. You will get everything. Just listen. Your currency sign and your currency sign. So whatever we are doing, or whatever we will be doing, it will be in the cash book. That is, we are reconciling our cash book to arrive at an agreed balance as per bank statement. We will make our reconciliation on the adjusted cash book balance to arrive at an agreed balance as per bank statement. If your balance as per bank statement does not agree with the balance in the question, that shows there is an error in either cash book adjustment or in this reconciliation statement. So whatever we will do after making our reconciliation, our balance will agree with that of the bank statement. But don't forget, all our adjustment or reconciliation will be on the cash book. What it means is we are not going to touch our bank statement, but we are reconciling the adjusted cash book. That is simple as that. So if we are reconciling bank reconciliation statement, so those items that we did not use in our adjusted cash book, there are two. One is unpresented check, and the second one is uncredited check. So in our bank reconciliation statement, you should put it at the back of your mind that all the reconciliation, all the adjustment will only be or center on either the unpresented check or the uncredited check. So this unpresented check, you must know what it means before you apply it to your reconciliation statement. So this unpresented check, it means we have a check payment, and this check payment has negatively affected our cash book balance, and unfortunately this check was not presented to the bank for debiting because we have made a payment using check. So our balance in the bank account will be higher than our cash book balance since we have given out the check. It is just like this. We have given out the check, lessing or reducing our cash book, and there were no effect in the bank, account. There were no effect in the bank because the checks were not presented while preparing the bank statement. So, and don't forget, all the adjustment will be on the cash book. So all the reconciliation will be looking at the cash or adjusted cash book balance. That is why we are starting with the adjusted cash book balance. If it is the bank statement balance that we're starting with, all the adjustment, all the reconciliation will be on the bank statement balance. But this is the cash book balance. So it has less, this unpresented check has less our cash book, and no effect in the bank statement because the check was not presented for deduction in the bank, because the relationship is positive. If an item reduces our bank, it will as well reduce our cash book balance. If it reduces our cash book balance, it will go to the bank and reduce the bank balance. Simple as that. So this is, let me give you a simple example. This is our cash book, and this is our bank account, bank balance. So we were having $50. Is an example, and we are having $50. So our cash book balance and that of the bank account balance, they have agreed 50-50. But we buy or we pay or we give out check of $20, and if you less 20 from the 50, we'll be left with $30. So this 20 check payment, supposed to have come to this our bank account to less our bank account payment, since it is payment, with the $20. But unfortunately, the $20 check payment was not presented. It has no effect in the bank account balance while preparing the bank statement. So our bank account is still $50. So since this reconciliation is by this cash book balance, we have the power or the right to touch this cash book balance. We are doing the reconciliation using the cash book balance. So we will add or less to the cash book balance, not the bank statement. So since we only have the power or the right to add or less to this cash book balance, you will now say, okay, for us to make it agree, we will bring, this is unpresented check. The check was not presented. Presented check. So we will now add the unpresented check to our cash book balance, since we're using cash book adjusted, to give us the 50, and here will be 50. Simple as that. So since it is by cash book balance, we will add the unpresented check to set up the balance, the payment that we've already made, for it to agree with the bank statement. Simple as that. So you add unpresented check. You add unpresented check. But if these checks in the equation, let's say in item 1 of the equation, we have unpresented check, item 3 or 4 or so of the equation, we also have another unpresented check. You will say, assuming check 1. Check 1, you put it, that is the essence of this currency sign. Check 2, assuming there are 2 in the equation. So you add it, and whatever you get, you add it here. This is your balance. You add it, then you will get your balance here. I'm leaving this space, I will put an item here. So the second item is uncredited check. So this check, now we are not giving out the check out. We are not giving out the check, but we receive the check. And we have taken this check to the bank to credit our account. But unfortunately, this check were not credited. So it's the same thing. We receive our cash book, it has added to our cash book, and no effect in the bank. It's the same thing, it's the opposite. So since we are only affecting our cash book, so, and we have already added this balance, this check, to our cash book, that is received and entered in the debit side of the cash book. Now we're going to remove it, since the check was not credited while preparing the bank statement. So we'll come here and say, you will less it. Say less uncredited check. And if these checks are 1 or 2, just as this, you say check 1, check 2. Then you bring it here. You add it, you get your answer here. And this answer, you will get this, and it is balance as per bank statement. This is the balance as per bank statement. So this balance as per bank statement, we compared with the balance of the bank statement in our equation, and the balance must agree with the balance in the equation. If it fails to agree, there is an error somewhere. So now, after knowing all this, if an error was made, the errors are two. So the error made by the bank, they wrongly credited our account to, or the bank wrongly debited our account. Made an error. So, all is error, but I'll explain this error. They wrongly credited our account with a full amount, say $1,000 was wrongly credited in our account. And here, say full amount, $1,000 was wrongly debited in our account. And this wrong credit will be added to our bank column of the cash book in order to agree with that credit that the bank has already credited our account, despite knowing that it was a wrong credit. Because we don't have the power or the right to touch the bank statement. This is a cash book, and the relationship is positive. You take the wrong credit and add it to your cash book in order for the balances to agree. Now you come here and say, add wrong credit. So practically, the unpresented check is also as undebited check. And this wrong follows opposite of each side. That is, undebited check, which is the unpresented check, with wrong credit. Uncredited check with wrong debit. So they follow in opposite side. Uncredited check, wrong debit. Unpresented check, which is undebited check, with wrong credit. Simple as that. So after putting this your wrong credit, you put it here. So if there is an error that overcasts the bank statement balance, say it's not a full amount, that is what we mean by error. The bank is supposed to have credited your account with 2,000, but they wrongly credited your account with 20,000. So this wrong or error will be added to your cash book or adjusted cash book balance in order for the balance to agree with that balance in the bank statement. So you're going to add error of overstating. Error of overstating you add it. This is a standard format of bank reconciliation statement, starting with the adjusted cash flow. We come down to the next item, which is uncredited check, and is the opposite of this. So your uncredited check will always come with wrong debits, wrong credit, here will be wrong debits, an error of understating. So your error of wrong debit will be here, overstated. So if you add it up, you get this. So this is a standard format of bank reconciliation statement, starting with the bank adjusted cash book column, that is balance as per adjusted cash book. So it is technical. The analysis is technical, but it is very simple. I hope you will be watching the video over and over, and also subscribe to the YouTube channel and click on the notification bell icon at bottom, and also click on all. So let's continue. This is the standard format, as I've said, of bank reconciliation statement, starting with the adjusted cash book. So moving to the next method, it is the same. That is the opposite of starting with adjusted balance of the cash book will be the opposite of reconciliation starting with the balance as per bank statement. Is the opposite. Whenever you know how to do your starting with adjusted cash book, the balance, you just turn it upside down. Say bank reconciliation statement as at July 20XX. Then you rule it. Your currency sign, dollar, your currency sign. So you say balance as per bank statement. Now, it's the same. It's the opposite of balance as per adjusted cash book. But the difference is our adjustment, just as I've mentioned, our adjustment will be on the bank statement. So since our adjustment is on the bank statement, not the cash book, all the reconciliation or adjustment will be on the bank statement balance. Simple as that. So this will be the opposite. We are adjusting our bank statement. So we must list our unpresented check to show that we have received this check that was given out. Since it has affected the cash book negatively, so let it affect the bank statement negatively. So you less unpresented check. It's the same thing, it's the opposite. So since we're using bank statement balance, the uncredited check, this check has been received in the cash book and is in the bank. But on the process of preparing our bank statement, this check were not cleared. So now let's clear it for our bank statement to agree with our cash book balance. So you will add the uncredited check. So in doing this, our balance will agree with the adjusted cash book balance. Simple as that. So you come here and say add uncredited check. Why I'm adding? In accounting, always think positive. So since we always think positive, we always start with positive, not negative. So that is why you see add uncredited check. And if the checks are many, let's say check the same thing, check 1 and check 2. So as I've said, if there is wrong credit or wrong debit, this is uncredited check. It will always move with wrong debit. The opposite will be moving, not wrong credit. It will be wrong to use wrong credit, uncredited check and wrong credit. So since we know, we have mastered it that if it is uncredited check, wrong credit will never come. So it is wrong debit. You say you add your wrong debit. Why? We are using bank statement. Since we are using bank statement, the bank wrongly debited our account, reduced our account. So the bank must add it up to the bank statement for it to agree with the cash book balance. It's simple. You add that wrong reduction back to agree with the cash book balance. Simple as that. So if there is error, it's the same thing. So it will be error under cast. It will be error under cast. So if the bank undercast your account, they're supposed to have credited your account with $10,000, but it was $1,000. So since the cash book balance have shown a debit receipt of this 10,000, I hope you are getting it, and it was wrongly debited or credited with $1,000 instead of 10,000. So you will add the error of credit undercast. So you add the undercast, and this is how it will look. This is how it will look. Then you bring it here and put it. So we'll move to the next item, which is unpresented check, and we are lesson it. Less unpresented check. And this check might be in form of like 2 or 3 in the question. Let's say 2. Check 1, check 2. Add it. Then is the opposite of this. Wrong. You're going to less wrong credit. This is undebited check. Wrong to move with wrong credit. Credit. An error of overstating or casting. Error of overcasting. Realize it. the explanation is the same, it's the opposite. So this will be balance as per adjusted cash book. Period. It's very simple. So this is a standard format of bank reconciliation statement. Please like our video, subscribe to our YouTube channel, and always watch the video. What we are left with is the treatment of overdraft. In case if the adjusted cash book is an overdraft and other balances, how are we going to treat it? So we'll look at it in the next video, but let me give you a clue. It is the opposite of all what we have done. So we'll stop here, and I'm looking forward to see you watching the next video, which will be on the bank overdraft, and we can possibly see if we can treat a practical question. Please subscribe to our YouTube channel, Accounting for All Levels,